Hi everyone, welcome back to my YouTube channel. Today I wanted to talk about something that on everyone's mind at the end of the year, and that is taxes. As Benjamin Franklin once said, there's two things certain in the world: death and taxes. The reason I want to talk about taxes is because most people concentrate on making money and not that many worry about keeping as much money as possible. When I do YouTube search about making money, there's basically videos about how do you invest money. There's different ideas how to make money, what to sell, but nobody really talks about how do you actually keep most of the money you make. And actually, another reason why I decided to talk about taxes is because Donald Trump been recently in the news. I believe last week it was a big thing in the news that Donald Trump haven't paid taxes in 2016. Well, basically, he paid zero in taxes. Not sure if it's correct or not, but there's actually nothing wrong with that. I'm sure he didn't break any laws, otherwise, it would have actually been in the news. But the biggest shock is that he simply paid zero in taxes in 2016. Well, let's look at Amazon and Jeff Bezos. Amazon paid zero in taxes in the last 3 out of 4 years. And Amazon is worth over $1 trillion. So there's different loopholes, there's different tax credits and stuff that companies take to avoid paying taxes. Guys like Jeff Bezos, Donald Trump, they have a bunch of lawyers and accountants who find different ways to save money and to avoid paying those taxes, which can account up to 40% of your income. Just think about it. Up to 40% of our income could be spent on taxes. If you find a way to save that money, it's the same as getting a 45% wage increase. Most of us happy with 3 or 4% increase. Imagine getting 30 or 40% increase equivalent. There are many ways to lower amount of taxes you pay on your income. Usually business owners or self-employed people know about those. They hire accountants and they find ways to lower their taxes. On the other hand, regular employees who work for a paycheck, who on a salary or hourly wage, they're basically getting paycheck every 2 weeks. The taxes are being deducted from the check, and we don't even give it a second thought of where this money goes. Can we actually get some of it back? So let's examine some of the ways how we can lower our taxes and keep more of our money for ourselves. Now, in Canada, we have RSP, which stands for Registered Retirement Savings Plan. That's probably the easiest way to lower amount of taxes you pay every year. Our friends south of the border have something similar to that, which is 401k or traditional Roth. The idea is that most people have higher income when they're employed, because usually when you're in your working years, you maybe have a house that you have mortgage and you're paying for it. You have savings that you're trying to grow. You're trying to invest money. You're paying for your children education. On the other hand, when we retire, most of the time we're going to spend less and we're going to require less income because most likely the house will be paid off, and the house is really the biggest expense we have. When you're retired, you don't really try to save, so you don't need that extra money. And once we retire, we don't actually have to stick around here. For example, a lot of people go and move to some warmer places where it's a lot cheaper to live. A lot of people retire and spend half a year maybe in Mexico or Vietnam or somewhere else where it's 3 to 4 times cheaper to live, where your money go a long way. If you did any research, you would know that some of those countries you can very comfortably live on $1,500 a month. And the reason it works is because income tax is a progressive tax. What it means is you don't pay a specific percentage on the whole amount, but progresses higher and higher as the amount increases. For example, in Canada, the first $12,000 considered to be basic income amount, which means we don't actually pay any tax on the first $12,000. After that, from $12,000 to $48,000, we pay roughly 26% based on which province you're located in. After that, from 48 to 97, we pay about 31-32%. And it keeps increasing. To put that in perspective, you pay $15,000 in taxes on the income of $60,000. At the same time, you pay only $5,000 in taxes on the income of $30,000. So what you notice is your income increased only 2 times, yet you paid 3 times more in taxes. So you can see why it's important to bring your income down as much as possible. Imagine taking that $10,000 that you saved and investing it. And yes, you can invest in stocks using tax deferred accounts such as RRSP or 401k or traditional Roth account. It's like free money that's gonna grow and generate more money for you. Also, the benefits of those accounts is quite often with RRSP, employees match set amount percentage, usually between 3 and 5%. I see it as a free money. It's like having a raise of 5% a year. The same goes for 401k. That's something that your employees set up for you and they match your contribution. So in my opinion, if your employee does that, if your employee matches your contribution to those accounts, you should definitely consider investing in it. Second option would be to generate money in an account that won't require us to pay income tax on profits we make. After all, any interest that you make by keeping your money in a regular bank account is taxable. You actually have to declare it as income on your income statement at the end of the year when you file your taxes. The same applies to regular marginal accounts in your investment brokerage firm. So if you maxed your RSP or 401k or traditional Roth accounts, or just choose not to use it, I would definitely suggest to use a tax-free savings account in Canada or Roth IRA in the United States. Those two accounts are very similar with small differences. With the tax-free savings account, you invest money, that money can generate and grow as much as possible, and when you're ready to take it out, you never pay any taxes, and you can take it out anytime you want. Roth IRA is a little bit different. You also deposit money that after tax, it can grow to any amount, but there's a catch. You can only withdraw what you contributed plus any income that you made in it tax-free after you turn 59 and a half years old. If you try to withdraw it before 59 and a half years old, you don't pay taxes on the money that you deposited because you deposited money after tax already, so otherwise you would pay double tax on that amount. But you would be required to pay tax on all the interest and all the profits you made in that account. The tax-free, it's different in Canada. The tax-free savings account, you can deposit and you can take money out anytime you want. Obviously, it's not that simple. There's few rules, such as, for example, in a tax-free savings account, if you take out money and you actually hit your limit that year, you're not allowed to put the money back in until the next year when the limit is actually reset. But that's small details. I'm sure if you decide to look into it, you can do research. There's lots of information available online about it. And it's very simple. And of course, there are a few other things to know about those accounts. For example, tax-free savings account has a limit of how much you can put into it. Current limit in 2020 is $69,500, which means if you were 18 years old in 2009 when the program started, you are allowed to put up to $69,500 into that account. If you turned 18 after 2009, then you would have to look up online what would be your limit. But both of those programs, I think, are very good to avoid paying taxes. Now, which should you choose? Should you choose RRSP or TFSA? Should you choose 401k or traditional Roth versus Roth IRA? Well, just like a lot of answers in the world, it depends. It really depends on your situation. It depends on how much you make now versus how much you expect to have your income in retirement. And the reason is, if you're not making a lot right now, say if you're making $50,000 or less, it might not be worth putting money into tax deferred account because you're not making much to begin with. And at the old age, we're actually going to get subsidies from government anyway. So you're better off pay taxes now and use things like tax-free savings account or Roth IRA to do your investment. On the other hand, if you're making $80,000, $90,000, $100,000, it's worth putting money into RRSP or 401k or traditional Roth to lower your current tax bracket. So you pay less taxes today and you're going to pay less taxes when you retire, because most likely you're not going to be taking out $100,000 every year when you're 65. And it also depends on what your plans are. Are you staying here, or are you planning on retire somewhere where it's a lot cheaper to live? So you have to take all those things into consideration. But definitely you have to think about lowering your taxes as much as possible. Now, what else can you do to lower your taxes besides using the tax saving vehicles I mentioned earlier? Well, if you own your own business or if you're self-employed, you can actually write off a lot of things to lower your income. You are allowed all sorts of tax deductions. Because of that, it's an obvious choice to own a company or be self-employed. Now, I know what you say. Yeah, if it was only that easy. Well, you don't actually have to make your full income from owning a company or being completely self-employed. You can simply do a little bit of work on the side. For example, let's say you are a web developer. You can pick up a contract here and there, literally make $4,000 or $5,000 a year. You obviously cannot survive on that income, but that will give you ability to claim extra expenses. If you're working from home doing that type of work, all of a sudden you're allowed to claim part of your mortgage payments well, the interest on a mortgage, electricity, internet, heat, water, property taxes, house maintenance expenses, your car insurance, your car payments, even new computer. What does it mean? Well, it means that all of a sudden, $5,000 that you made on the side is equivalent of making $7,000 or $8,000, because it's going to be all tax-free, because you actually use it to write off other expenses that you would have to pay for anyway. And expenses don't end there that you can write off. Let's say you go for dinner with somebody who could be a potential client. Well, you write off part of that. I've even been told that, let's say you fly in from North America to Europe. If you have a business meeting there with the potential client, you actually can write off plane ticket and even stay in a hotel room. So let's say you go in for a week or two. If you only had one meeting, you won't be able to write off 2 weeks of stay, like 2 weeks of hotel stay. But you can write off plane tickets, and you can write off a couple nights of stay in a hotel. And that's a lot. And it's limitless. Like, to be honest, I don't even know myself everything that could be written off. But you just do research. And that's why they say rich people keep getting richer. It's not because they're using us, smaller people. That's not why. It's simply they're smart and they know how to take advantage of all the loopholes. It's not even a loophole. It's the law. It's the rule. But just average people, we don't even think sometimes about it. We just pay the tax and okay, I guess that's how it's supposed to be. Well, no. Who says that it's supposed to be like that? So do the reading. Find an accountant who can help you. Become friends with the accountant and go for coffee, go for a drink and just talk about it. Talk about the taxes. Ask questions. I hope you're starting to see the benefits of being self-employed or doing a little bit of work as a self-employed person. It opens completely new possibilities for you. I hope you liked my video. As always, please click the like button. Please click subscribe so you get notified whenever I release new videos. It would help me a lot. And, if I see that many people like my videos, I'm going to keep posting more. If you want me to talk about something else, a specific topic, just put it in the comments and I'll make a video about that. Thanks. And I'll see you all later.